Hey everyone, it is Evan here from the Trade Risk on Tuesday, July 24th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So thanks so much for tuning in and watching. Remember, if you do like these videos, you can subscribe on our YouTube channel. Every Tuesday and Friday, release market recap videos just like this. Keeps you updated, entirely free of course, just keeps you updated with all of the latest publications. So with that said, let's jump into this week's analysis so far. It is starting with the S&P 500 here. It is the cash market weekly time frame that you're currently looking at. Each bar represents 1 week worth of trading. And if we look at the performance so far, it is only Tuesday, of course, but for the week, we are up 0.5% here in the S&P 500. So if we zoom in a little bit closer and look at this week's candle here, you can see we are getting that forward progress. And if you recall from last Friday's video, if you listened to last Friday's video, we talked about a reference point for you shorter term traders, specifically of last week's highs. So that level comes in right around 28.16. You can see we did certainly surge above that so far this week. That was in today's trading. We'll look at that a little bit closer on the daily chart in just a moment. But we did briefly surge above last week's highs, but notice we did get that tail on the top end here, and we are closing below it. Again, this is just Tuesday, so it's an we're looking at an uncompleted weekly candle, but that is the point of this exercise, is to give us just the broader landscape before we sort of drill down into the daily chart. But see here, the reference point that we did have was last week's highs. It is still flexing its muscles a bit here as potentially a spot of hesitation or reluctance of this market to move higher, but we will want to pay attention to see how this week closes out and whether or not the bulls can recover and close higher here above last week's highs and reclaim some of the gains that we saw from earlier today. Otherwise, not a whole lot has changed here on this chart. We are still trading above a rising 8 and 20 period bullishly aligned rising moving averages. So that does put the benefit of the doubt to the buyers at this point in time. And we are still holding above our horizontal level of resistance, our point of interest around this 2800 level in the S&P 500 until that breaks, or if that breaks, we do want to give the benefit of the doubt to the buyers here on this time frame. Now, let us go down to a daily chart here of the S&P 500 and look at today's candle. It's a little bit of a messy. It's not the prettiest candle here for the bulls. It's kind of it's a candle that I would say it's a little bit of something for everyone. It was a win by the bulls for still making the forward progress. We still did finish higher today, up 31 basis points, but we certainly closed well off the highs of the session, and any aggressive short sellers here or bears are going to cling on to the failure to essentially hold above last week's highs and to hold on to the majority of today's gains. And if you're looking at aggressive short entries here, I'm sure this is a candle that you could start to take a stab at things with a stop at, essentially today's highs. But we're not talking specific strategy here. It's too difficult. There are lots of traders watching this with different time frames and strategies and interests. So let's just map out the broader levels. First things first is 28.16 or so. That is last week's highs. That's indicated right here. You can see we closed right underneath it. Today's highs now is going to be a good point of interest here, especially the way we closed. I think, again, you active traders that may be looking at this as a potential day one starter entry, or if you're looking at potential short weakness to come in here, I think you have it, and your stop or your level of significance is certainly going to be at today's highs. And then below us, we have this 2800 level, maybe more specifically is this Monday's lows at 2795. If we start to break down below here, then things get a little more dicey, or a little more neutral, I should say. Again, we still are in a uptrend here on the daily chart. We still have rising 8 and 20 period moving averages. In fact, momentum building today, at least to the upside here on the broad average of the S&P 500. So it's tough to get too bearish here. I think we do want to monitor today's weakness, today's inability to hold today's highs, but we're going to need to see some follow through. We really want to see support taken out. That's what's going to really start to tip the favor and break the established uptrend that we are still in. So the S&P 500 does remain higher here is still in an uptrend, is showing a little bit of reluctance to maybe move higher north of this 2820 level. We're going to want to pay attention to see how it maneuvers through the rest of this busy earnings week and finishes out the week after all is said and done. Those are the levels I'd be paying attention to. Today's highs, 2816 and then 2800 or 2795 or so on the downside, 2790 even on the downside. Really just this whole general vicinity, I think is you know, loosely what I'd be paying attention to as a support area. Now, the problem of concern or the area of the market here that did receive a kind of a shot across the bow today was the Russell 2000. And we talked about the Russell 2000 throughout this, you know, when it was consolidating in this area here, we basically said, look, you know, it's not the end of the world. We have small caps taking a little bit of vacation here, large cap financials, some of the larger cap Dow components, they were starting to lead higher in here. And the Russell 2000 had seen a nice leg higher, you know, a nice kind of move higher throughout May, June, April, and a little bit of stalling out here, rotation, sideways movement wouldn't be the end of the world. It would actually be a healthy thing. So it did in fact consolidate for another week or so. And now today though, we did get this very alarming sort of bearish engulfing bar, an expansion in range. We engulfed the prior 4 days worth of trading or 3 days worth of trading, and we did close near the lows of the session. This is now getting a, you know, this would be a slightly more concerning break of support at this point, given the fact that we did consolidate up here for a couple of weeks now. If we started to get follow through below today's lows, below this 160.650 level, that would put a pause in the momentum here and potentially spill over to some of these other major averages. I know for myself as an active trader, it's always great to have the Russell 2000 in favor and leading on the upside because it holds a lot of the higher, more volatile stocks that traders like to trade. And when we have the Russell kind of breaking down, or, you know, I don't want to say breaking down, so let's keep it in context, but engulfing, bearishly engulfing the past couple of days worth of trading, I think as traders, we feel that more because these tends to be the positions that we're tilted to. So even though, you know, the S&P 500, the Dow, the Qs, they were all up today, I think from, you know, looking at the smaller cap names, the more tradable stocks out there, this definitely feels a little bit different when we saw such a divergence today in performance between the Russell and the rest of the market. So I do think it's a point at which we should be paying attention to. It was high volume. We did bearishly engulf a couple of bars, but we do need to see some follow through. 166 or so, that's still holding for now. But if this continues to roll over here into the end of the week, that could cause a little bit of a concern here for the market overall. So I do think this is a high stakes level that we want to be paying attention to. Notice the moving averages here are still bullishly aligned. So if you're taking a short position here, it is still a bit aggressive, but certainly given the loud price action, the uptick in volume, the bearish engulfing nature here, there's certainly some evidence here for you shorter term traders to maybe be looking at that potential breakdown or rollover or rotation, however you want to think about it. But for me, I'm looking and just waiting to see how this ultimately gets some, if this ultimately gets some follow through and how this finishes out the week. Go to the Nasdaq 100. You can see again, not the prettiest session today, but still making some forward progress, a little bit something for everybody. We did close well off of the highs today, closer to the lows of the session. And I think these levels outlined are pretty clear here. The highs from today are right around 182. The highs from last week coming in right at about 180.65. We closed right below it. And then the lows here around 177.60 or so. That's what I'd be paying attention to. The trend is still higher here. Maybe there's just a bunch of chop that kind of ensues from this point forward, but we do have a lot of earnings coming out this week. So let's pay attention to these levels. Let's see how this finishes out the week, and let's see if this can, you know, restabilize itself and reclaim some of the gains that it lost intraday. So that is really the landscape overall. It's a mixed bag right now. There's divergence between the Russell 2000 and the rest of the market, but trends are still higher. All in all, as I've been telling subscribers here, it's better to just kind of sit on our hands and let some of this chop subside. Let there be some more clarity. It's summertime. Things are messy. From my experience, the more buttons you press as an active trader in these types of environments, the more harm you're going to do to your account. But again, everybody's strategy philosophy is all very different who's watching this. So that I think covers up the markets overall. Let's get into some of the other majors here. We got TLT, which is rebounding a bit today. Got hammered yesterday, down 1.23%. That was following up last Friday's 1.23% down move. So back to back, lost about almost 3%, 2.5% in the TLT. And a bit of a breakdown here of this trend line and losing this 121 support. So it was hanging up here near the top end of this range. We saw a sharp move on volume, break this trend line here, and fall back into this 10-month range or so. So we are back to sideways at best here for the TLT with a short-term trend that is lower. USO, you can see here, did finish higher on the day, did close a little bit off of the highs. It is up on the week a little over 0.5% here, still in a kind of a tough spot. Moving averages have converged and flattened right at price. That is generally a good sign of a headache in the short term for USO. We got this kind of latest move to the downside. We're starting to recover a bit. To me, just looks like it's kind of in a tough spot here and really doesn't have much interest in my opinion one way or the other. Natural gas also trying to stabilize here. We had this nice kind of loud reversal, outside reversal day here on the 19th, really trying to stop the bleeding from this downtrend that started in June. And you can see it is still moving sideways. Moving averages still bearishly aligned, so there is still pressure and technical structure. The trend is still lower here in the short term for natural gas. So it's to the bulls really have to prove themselves here. So for me, just doesn't look a whole lot actionable for one way or the other. Some volatility coming in, some volume coming in. So for your shorter term traders, you may find a little more interest there. Gold is at a back to these levels that we saw some pivots, some influential levels back in early to mid 2017. But structurally, this still remains in a very difficult spot as well. The trend has been sharply lower. Doesn't look to be changing at this point. A little bit of a pause here, so the bleeding has stopped, but we do need to see a little more. Really just would like to see more volume, more of a washout, or just really some more sideways movement here for anything to really change. So for me, sellers remain in control, but it has been beaten up enough where a little bit of mean reversion here wouldn't be all that surprising. Ether and silver kind of in a similar situation, downtrend, sellers in control, and moving averages both bearishly aligned, kind of banging against price overhead. So for me, sellers in control, not really interested in this one way or the other. Some volume coming in, maybe a little bit of some capitulation over the past couple of days, but or the past week of trading, but still nothing meaningful yet for gold or silver for bottoms, at least in the way that I observe price action. So that I think wraps up everything for this midweek update. Hopefully you guys are making your way through some of this chop. Remember, we got earnings season out, so pay attention to those holdings, check your earnings dates, and keep an eye out for those spillover catalysts as some of these companies report earnings. Thanks so much as always. Remember, do subscribe to our YouTube channel if you like the videos, and I will talk to you on Friday for the weekend market recap video.